Now for our feature story of the day. Max Keiser says BRICS will leverage gold stablecoin to counter the dollar hegemony. And VanEck confirmed China and Russia settling energy trades in Bitcoin, which is obviously a major step towards de-dollarization. And also breaking news just shared today from Bitcoin Magazine. Financial firm Jefferies analyst says China and Russia are encouraging more domestic Bitcoin mining. Now, this leads to a term coined by Max Keiser many years ago, which is the global hash war, where companies or countries, I should say, are competing for Bitcoin. For example, Trump, who announced he wants to make America the Bitcoin mining hub of the world. And there's only enough Bitcoin to go around for one country to become the Bitcoin dominant superpower. And this is according to the likes of Max Keiser and Michael Saylor. So they're really urging and pushing for the Trump administration, hence their pro-Bitcoin, to really do something here and establish America as the Bitcoin superpower by purchasing as many Bitcoin as possible. And as you know, as long as it's a net neutral way to do so, they have the green light to do it, whether it's trading gold derivatives, paper notes, or whether it's, other creative ways they can find money being wasted and just pour it right into the Bitcoin, or whether it's just printing money out of thin air as money printer go brr. But these are some viable ways for the United States to get their hands on somewhere between 1 to 5 million Bitcoin, which is what Saylor's proposing for Trump to do. And if you do the math, 5 million Bitcoin would literally be 25% of the supply, which is mind-blowing. But as you can see in the key takeaways here highlighted in the yellow, Bitcoin mining difficulty is increasing, partially attributable to China and Russia encouraging more domestic Bitcoin mining. While the typically post-halving Bitcoin price rally has occurred mostly due to the election of Trump, the increase in the network hash rate has pushed up the difficulty and reduced hash price. That's right, the difficulty continues to hit a new all-time high, which is a good sign. And these tweaking economics are further pushing the miners to explore a pivot. So let's go. Let's dive a little deeper. This was more recent news. VanEck, major asset management giant who projects Bitcoin reaching like $1 billion per coin in the next 20 years, they confirm China and Russia are currently settling energy trades using Bitcoin. So we're going to tap into this and we'll go from there. Bitcoin has become more than just a speculative asset. It is now evolving into a functional monetary tool, especially in economies seeking to bypass the US dollar, reducing exposure to US-led financial systems. VanEck's head of research says China and Russia have reportedly begun settling some energy transactions in Bitcoin and other digital assets, which is clearly a significant step that further drives the narrative of de-dollarization, hence in support of the BRICS movement. The global financial landscape has been changing rapidly with the Trump admin's April 2nd tariff package reigniting trade tensions. The tariffs targeting imports from China and the European Union have heightened risks of monetary and geopolitical fragmentation. VanEck notes this policy shift might be bullish for the biddy, as it could prompt the Fed to cut the rates. Will they cut the rates, though? What are your thoughts? The report explains that if tariffs affect GDP without causing a fresh inflation spike, it may reintroduce the liquidity conditions under which Bitcoin has historically excelled. This sets the stage for Bitcoin to benefit from an environment where liquidity is more favorable and interest in digital assets continues to rise. And in developments, China and Russia's decision to settle this energy trade using Bitcoin signals a shift towards crypto adoption on the global stage. VanEck's report emphasizes that this is no longer a theoretical concept, but a tangible reality. It's happening. Quoting them here, Bolivia has announced plans to import electricity using crypto, and French energy utility EDF is exploring whether it can mine Bitcoin with surplus electricity currently exported to Germany. These examples are indicative of a broader shift as nations begin using Bitcoin not just as a store of value, but also as a tool to circumvent the dollar-based financial system. The weaponization of trade and financial infrastructure, largely led by the U.S., has fueled this movement. Countries increasingly seek neutral settlement systems that avoid dependency on the dollar. And VanEck highlights that Bitcoin's growing adoption by nations like China and Russia could clearly accelerate adoption of crypto as an alternative settlement layer, marking a crucial shift in the global trade dynamics. Well said. I also want to touch upon this. Max Keiser stated that BRICS, driven by China and Russia, and India will push the adoption of a gold-backed stablecoin, which he has been calling, to fight the hegemonic US dollar stablecoin. The former will have the advantage of being inflation resistant, according to Max Keiser. So let's dive a little deeper here. International markets are on the verge of a fight for dominance where emerging groups will defend their independence from the US dollar dominance. Max, current crypto advisor to the Bukele administration, and as we know, the Bitcoin mega perma bull, claims that gold will be one of the tools leveraged to counter the hegemony of the upcoming dollar stablecoin. That's right, and quoting Max, gold is the poor man's Bitcoin. Take that, Peter Schiffmeister. Keiser took it on X to explain what would happen in a scenario where the dollar starts becoming ubiquitous in international trade markets, with alternative blocks putting a defense organized with the digital gold right at the center. Quoting him here from X, the BRICS, principally Russia, China, and India, will counter any attempt by the U.S. to introduce a hegemonic USD-backed stablecoin with a gold-backed stablecoin. So that's what he firmly believes is going to happen. Furthermore, he added that this alternative would be favored by other countries, which would prefer a gold-backed token, given it offers protection against inflation and does not boost the U.S. hegemony, which is ultimately their dominance and their reign. Keiser added that adopting a gold currency would be easy, at least in India. Quoting him here, India already runs on a de facto gold standard, and Sharia law in Muslim countries, that's a fact, would dictate over a USD Reba coin as well. The idea of a BRICS gold-backed currency surged in 2023 when the concept of a BRICS unified token was still a part of the agenda of the international group. Economist Jim Rickards stated that the currency would mean trouble for the dollar, as it would go up as inflation and devaluation hit the U.S. economy, ostensibly leading to the greenback's destruction. Nonetheless, the idea did not crystallize. President Trump warned that he would hit the BRICS with a 100% tariff regime if they dared to play the games with the dollar, creating their currency to conduct intra and extra block trading transactions. And if you don't know, now you know. Let me know your thoughts with some of those headlines, especially regarding China and Russia encouraging more domestic Bitcoin mining as the global hash war continues. Bitcoin game theory in full effect. And if you don't know, now you know. Welcome everyone to the Q&A segment of the live stream.